All right, this is Gerrod Galliano. I'm sitting here with Alex Astin. This is Coffee Chat. We are talking about presidential elections and do they affect stock markets? What do you think, Alex? Welcome.
Thank you. Thank you, Gerrod. Ultimately, the answer is yes and no. It really just depends on the year that you're looking at, depending on the election that you're looking at. But historically, what we've seen is that markets tend to outperform during election years.
Yeah, so the stat that we pulled up since 1960, there's only been, with 16 elections, the market's only been down three times, or three elections. So stats say that it's on your side. But look, let's be realistic about this. Why are people feeling so nervous? Because we talk to a lot of people. We see a lot of people kind of like thinking about retirement. And this is on everyone's mind. Let's go through some of the reasons.
Well, I think the first reason that you look at, there's such a contrast between both candidates that we have. So there's a lot of issues on the same page as one another. So it comes down to who gets elected, and it really could go both one of two ways. The first thing that you look at is taxes, right? What do we expect in taxes? Maybe one candidate will lower taxes or keep taxes the same. Maybe one candidate will raise taxes. We are $34 trillion in counting in debt
just a little
as
bit.
A country.
Just a few bucks.
Yeah. So there's a lot. It's come down to crunch time in the U.S. when it comes down to the dollar. You look at cryptocurrency. What are the policies even surrounding that? And when it comes to the IRS and the agents that they've hired and come to auditing Americans in the middle class, it really there's a lot of debate on which is the correct route to take. So I think this could be an election. We thought 2020 was the same thing. This is an election like unlike any other. So 2024, we're probably going to get the same thing. And it's just a huge divide.
So one of the things that you said that I think listeners might want to know about is you said taxes. Because look, the market is definitely kind of poised to go both ways. With people anticipating all these things that can happen with the different electoral results. Talking about taxes, what can happen because we're currently under the Trump tax cuts, which are an executive order, if I'm correct, because the original could not pass, into a law. So what's going to happen? Let's say, if he wins, if he loses, what's going to probably happen with taxes?
So what we look at here is we know those tax cuts expire or sunset at the end of 2025. So in 2026, we're set to go back to where the tax codes were prior to 2018. And essentially what that's going to do is increase your tax rates. And what the big difference is most people say right now, well, I'm paying taxes. It seems like I'm paying a lot of taxes. Well, those are only going to go up. And so one of the big issues and one of the biggest ways to get votes is discussing taxes that keep more money in your pocket. And so my opinion is we're $34 trillion in debt as a country. And so the tough part is we've got to come up with these tax revenues somewhere. We're at the highest interest rates that we've seen since the 80s.
So yeah, we had recently went to listen to some tax speakers on that topic. And I don't necessarily agree with this, but I really like how they worded it. They said, look, talking about the Trump tax cuts, is there a chance they stay in place? Because a lot of people like this tax code. It's a lot of people are paying 12%. Their average rate overall might be like 10 to 15 versus maybe the prior code, it would be more like 18 to 20. Corporate America likes the tax code also. So a lot of people want these cuts to stay, not being political about it. They just like the code.
Yeah. Who doesn't like paying less taxes?
Less taxes is usually a good thing. So anyway, the speaker made an interesting point. She said, well, look, what's the chances Trump wins the election? Let's say it's 50-50. That's a coin flip, right? Then to pass the law, you have to have, the Senate and the House also pass it. So what's the chances they each go red? That's 50-50, 50-50. That's three 50-50s, and that equals 12%. When you actually take three 50-50s going your way, it's 12%. I was like, oh, man, I didn't think about it like that. And then when Trump was first elected, he had the House and the Senate, and he still couldn't get it passed. So the reason most people think this code is going away, or at least going to be renegotiated and turned into something else, is that fact that it's technically a low probability.
Sure. And we've seen that. There's just going back and forth. There's usually a lot of argument this side and that side, and nothing really ever tends to get done. Yeah. And typically when that happens, though, you tend to see markets outperform because there's not a lot of big policy changes. I think one area that we need to look at is when it comes to legislation and what they're going to do with taxes, right? Say these tax codes do sunset as we expect, and we get back to our new old tax code in 2026. Well, at the surface, what most people see is, all right, well, what tax bracket am I in? What average taxes am I paying? Mm-hmm. But I would certainly expect, right, again, we're in quite a bit of a hole as a country in debt. So what we look at is where we might start to dig into that is limiting IRA contributions or 401k contributions, account maximums, right? And then you also look at what's going to happen when it comes to deductions.
And you're talking about just benefits. How can they get tax revenue?
Right. Because at the surface, to get voters, they're going to say, hey, we're not going to change your income taxes.
Mm.
Well, okay.
So where can they find it?
Where can you find it? It's going to be with deductions. It's going to be with benefits. They're just going to try and dig into everything under the surface to try and claw some of this back because we have to. The ladder keeps going up. We have higher interest rates. And so we've got to find some way to start digging out of this before it comes out of hand.
Yeah, so absolutely, guys. Alex is on the money here. We just looked at some charts that cited that the money that's already been allocated in spending for the U.S. on income is now going to outweigh the income because they argue about the discretionary spending. What can we spend on top of the money that's already been pre-allocated to Social Security, Medicare, the big chunks? Probably in the next couple of years, they forecast that those chunks will already be allocated for all of the revenue, meaning there really is no discretion to argue about because all the money's already been, requested by all these agencies that demand it. So we're getting to a real crossroads in terms of where is the money going to come from, which is back to the original point, why the election feels like, man, there's some real consequences here in terms of what direction we go. And I think the markets are kind of trying to find their own way into how that's going to look.
Yeah, and another topic that we didn't really dug into is what happens with business taxes as well, right? Because if you're investing your money in the stock market, you're in a mutual fund or you're in individual stocks or an ETF, well, ultimately their taxes and their bottom line and their revenue ultimately determines how your stock and your portfolio performs as well. So the answer would be yes. Stock markets are affected by elections, but you tend to see in the election year markets outperform. But it's much more beyond that than just the year that they're elected.
So look, guys, to wrap things up, I think that's a lot to think about. Everybody feels the pressure of this election coming on and the markets. Do we have recency bias? Is it always like this, or does this one feel a little kind of on edge? I don't know. There's a lot of data that supports that this one does feel like there's a lot on the line. However, what can we give people before we leave as a recommendation going into this thing? If they have the fears, what can we tell them before we go on maybe what they can do with their portfolio?
Well, you always want to build a portfolio no matter who's in office to make sure you can withstand market volatility. Mm-hmm. You've experienced a good market and a bad market just recently. 2022, bad market. 2023, we had a great market. Mm-hmm. So you saw what your portfolio did. If you made no changes and you were okay with the volatility that you saw, then you're probably going to be okay for the next election. But if you maybe saw too much downside in 2022, maybe scale back some of that risk. We are at recent highs when it comes to rates. Mm-hmm. So you have fixed income options to get more conservative, not go moving your money into a CD that's paying like what you like to call point nothing. Now you can get CDs over 5% for a year. You can get into investment grade bonds. You've got all these fixed income options that you really didn't have in the last couple of years. Mm-hmm. Well, really, you've just recently gotten than you didn't have the last 10 or 15 years. So you can certainly get much more conservative and still earn some interest on that portfolio and then wait out the election. Now, the tough time what we have with markets is timing them, right? I mean, timing markets is nearly impossible. So we just ultimately recommend building something that you can withstand the volatility of markets ups and downs.
All right, guys. So you heard it. Alex says if you want to go safe, there's some good options for you right now. So we're going to call it. This is Coffee Chat. Gerrod Galliano, Alex Astin. Take care, and we'll see what happens.